I would hope everybody has learned after the Synapse debacle that you should be overseeing the third parties. This concept of direct, not direct is still baffling to me. If I have a program, doesn't matter what technology I'm using, that's direct because I'm in charge. We're the bank, we're in charge. I oversee every element of that product. There's concepts of program management. I might have somebody else who's the program manager. I might use some slightly different technology. But at the end of the day, these are all direct relationships. It's just a matter of how you're overseeing the technology and who's the program manager and in those types of relationships. And at the end of the day, the bank is in charge.
This episode is brought to you by the AI Native Banking and Fintech Conference, hosted by Spring Labs and the Utah Bankers Association. It's on September 29th at the University of Utah in Salt Lake City. AI Native is built for the people who run the bank, operations, compliance, and risk leaders, bringing them together with the fintech leaders and AI startups. No theory, just practical solutions to real problems. We're capped at 450 people and expect a sellout. So register now at conference.springlabs.com. This is the FinTech One-on-One podcast, the show for fintech enthusiasts looking to better understand the leaders shaping fintech and banking today. My name is Peter Renton, and since 2013, I've been conducting in-depth interviews with fintech founders and banking executives. My guest on the show today is Amanda Swov, president of Hatch Bank, a California chartered ILC focused exclusively on fintech lending partnerships. Amanda has one of the more complete backgrounds in this space. She started her career as an examiner at the Federal Reserve Bank of Minneapolis, spent 9.5 years at Sunrise Banks, where she became Chief Risk Officer, and then 5.5 years at Unit as Chief Compliance Officer, joining as the fourth employee. In our conversation, we talk about what she took from each side of the industry, regulatory, banking, and fintech, and why she still describes herself as a banker at heart. We get into Hatch Bank's credit-focused model, her first 6 months as president, the quality of fintechs approaching sponsor banks today, what the industry should have learned from Synapse, where AI is actually moving the needle in compliance, and what it takes to be a long-term winner in sponsor banking. Now, let's get on with the show. Welcome to the podcast, Amanda.
Thank you. It's great to be here.
Great to have you. So let's kick it off by giving your listeners a little background about yourself. I know you've been in fintech for quite some time. Hit on some of the high points of your career to date.
Yeah, I started my career as an examiner at the Federal Reserve Bank of Minneapolis, actually in the compliance area. Did that for a couple of years. It was probably one of the best possible ways to actually start my banking career, to really truly understand kind of the fundamentals of banking. Spent a real short period of time in consulting and then went to a family-owned bank that was pretty traditional and really learned true banking fundamentals when I was there. It was a great experience, but then had the opportunity to go over to Sunrise Banks that was doing some more interesting fintech-related things. I would say that they were probably one of the OGs in this space that really, started along with some of the larger prepaid, banks that were in this space, and had an amazing team there. Spent 9.5 years, started as the compliance officer, eventually became the chief risk officer. And just an amazing place to be, really learned a lot. But I felt a pull to maybe want to go onto the tech side of things and learn a little bit more about what some of our partners were doing on the other side of the business. And so I went to work for Unit, which is a infrastructure company within this space, essentially kind of like a sidecar, right? That would help fintechs and banks communicate with each other. And that was an amazing experience. Spent 5.5 years after about 9.5 years at Sunrise. Spent about 5.5 years at Unit as their chief compliance officer. But really, when you're basically the fourth employee, you're doing kind of everything at the beginning. So it was one of the early employees. And it was an amazing experience. I learned so much about technology and how product works and really kind of how to build something from the ground up. But what I realized, and I also told the co-founders, they weren't surprised by this, I am a banker at heart. That was really where my heart was at, my passion was at. So I wanted to get back into the room and really, I'm passionate about this business, but I just felt like there was something greater I could give. Getting back into the bank side of things after my my learnings there. And I met the ownership of Hatch Bank and just immediately knew this was the place I had to be. They just understood the commitment. This is all we do. I don't have to worry about what's going on in a branch or, other things. Like, this is purely my focus. And I have an amazing team. So the last 6 months have been an absolute blast, kind of getting back into the banking side of things, and maybe not a traditional path for a compliance officer or a risk manager to become a president. But at the end of the day, running a bank is about risk management, whether it's financial, compliance, commercial credit. So I feel like it gave me a good background to launch into this.
Yeah, I mean, it's really interesting, your background, because there's not many people who have been on the regulatory side of things, the bank side and the fintech side. That sort of feels like all the components. When you look back then at everything you've done, like, what do you think some of the learnings are that you had from each side of the business?
As a compliance professional, really starting my career, what quickly allowed my career to take off is that I wasn't the department of no. I was the department of possibilities. I would always listen and sit with my business partners. I think one of the most fundamental moments I had in my career, and I will be forever grateful to an individual named Barry Super. I'm going to give him a shout out. At the first bank I worked at, I was the compliance officer. I'd come from consulting and regulatory. I came in and I said, here's a new reg. And he highlighted the things and handed it to him like he was going to go implement it. And he was like, no, that's not how this is going to work. Like, you got to figure out how to implement this with me. And so it was this really eye-opening experience where I had to figure out how everything worked from nuts to bolts. It wasn't just the compliance rule, but I had to figure out how to integrate that. And I realized the magic came from when you can embed compliance into the day-to-day and make it not feel like it's a checkbox thing, but it's just something that's embedded into the system. And when you realize that, when the business partners start to realize, oh, wait, they're actually an asset to this because they can think about things and make sure I stay out of trouble, but make it easy. That was a really eye-opening experience. So truly understanding how banks need to work in the fundamentals, I think, was really fundamental. And also just like, the moments of understanding risk management. Anybody who's worked with me has probably seen me draw a 9-box on a whiteboard at some point, kind of talking about the likelihood and impact of something and really trying to frame risk appropriately, right? Why are we spending time on things that really don't matter when really we should be focusing resources on the big, hairy things that could, really impact? And so just building that risk management, those fundamentals of having to like manage and build an enterprise risk management function, it can really translate to any area of the bank. And then kind of learning how to do sales, right? When you had to work at a technology company and you're a new employee, you're kind of having to sell your idea to everybody. You're selling it to a bank, you're selling it to a fintech, you were selling it, with conviction, that you believed in what you were building. And so when you kind of take that sales approach and you take that risk management approach and you kind of tie through as kind of the fundamentals of what banking is, I think that, those were some of the experiences that really helped me get to where I'm at. And quite frankly, when we see things fall apart in today's environment, sometimes those are the things that are missing. Maybe somebody's really good at sales, but doesn't understand how the business actually works or the banking fundamentals that come along with it. So I feel pretty blessed to arrived here kind of with the path that I followed.
So let's dig into Hatch Bank for a little bit. Can you just sort of give us a brief history of the bank and what differentiates you from other banks in the sponsor bank space?
Yeah, there's a growing number of us in the space, which I think is actually a really good thing. I think competition is always really good. So we are a credit-focused fintech. So today we are solely focused on offering credit products, consumers or small business. And I think that, one of the differentiators for us is really staying close to our ideal customer profile of who we want to serve, right? So we're in the home improvement space. We're in the small business space. We're in the clean energy, in student lending and in healthcare financing spaces. So we know our niches and we're open to new niches if we understand them and we feel like it's something that we want to get into. But we really want to know who our partners are and dig into that. Some banks their model might be to bring on 20 to 30 different partners because they want to diversify. They want to have a wider array and number of different clients. For us, we really want to stick in the industries that we know well, and we want to go really deep with those clients and maybe have a more limited number of what those clients are going to be and dig in with them. For example, they might offer consumer lending, right, to somebody that's going to go in and get braces at their dentist office. But we can also work with those dentist office, right? Because they probably have to buy inventory and they probably have to buy equipment, right? And so it's really finding ways that we can really deepen relationships and have those lending products across consumer and small business. And also stay within our risk profile, right? Some banks have a wide aperture of what they want to do, and they'll look at a lot of different options because that's what their clients need. And that makes sense for them to maybe do international remittance or work with digital assets. Today, that's not what we're doing, right? We don't have deposits. And so we're not having those types of things. So we just hope to serve, the clients that we have really deeply. They can pick up the phone and call me. They can call the chief revenue officer and really have that direct access to us because we're keeping things pretty curated here in terms of what we're doing.
So you are exclusively a sponsor bank. Tell us a little bit about how that developed and how long you've been doing it and the scale of number of programs you have.
Yeah. So, probably 5 to 6 years ago is really when we got going and started with things. And it really came from the vision of our ownership. They had owned a thrift out in Rancho Santa Fe thrift in California. And they knew that they wanted to switch the model of that to a different type of organization because they weren't doing the type of lending that they had been before. And they really saw the vision of this space and got going with that and started to build it. And as with any bank and in this space, you have some starts and stops, right? Where you bring on some partners and you do things and then you maybe decide this isn't maybe the right direction or the direction we want to go. And so it evolved over time and, really moved into that credit focus side of things. I would say within the last probably 3 to 4 years, the focus of things really started to come in. And within the last probably 2 years has really been refined really well. And I would say that that's probably a similar story to what I've experienced in my career all along, is that when somebody gets into this space, it's a little bit more of a wide aperture of what they're willing to get into and take a look at. And then as you get in and become a practitioner and operationalize things, you start to maybe refine what that risk appetite and where the business model is going to be successful.
So just on competition, there are others focused on the lending space that have a long track record and have significant scale. How does Hatch compete with some of those more established players, would you say?
We're a great place for somebody who's getting started, right? If you're a second-time founder and you have experience, you know what to do in this space, but you have a new niche that you're going after and you have that target market, it might be a little bit harder to get the attention of somebody who's doing things at scale, right? If you go to one of the larger banks, they might be able to give you a little bit better pricing. They might be able to do things because they're operating at scale. And I don't know, I don't want to speak for them, but what I always tell our clients is if you can get my chief compliance officer on the phone if you have a compliance question. She's going to talk to you. She's got a really great team. They're going to walk you through this. One of the best compliments one of my clients gave me is the other day is your team feels like an extension of our team. It's really, truly a collaborative space where there's not we're here to get you. We want to say no to things. It truly is collaboration. And so it's a very high touch feel, right? So maybe when you go to a larger organization, there's certain benefits that will come along with that. But with us, you're going to get a more intimate, curated development with our team to be able to really build your product in a way that maybe you wouldn't get someplace else.
Okay, so you've been in the role about 6 months. Tell us a little bit about how those first 6 months have been. I know that you live in Minnesota and the bank is in California, so there's obviously a lot of travel involved. But tell us a little bit about what you've learned and how you've sort of put your mark on the bank.
Yeah, I think that, the team here is amazing. That was the first thing I noticed when I got here. It took me about a week to be like, wow, did I hit the jackpot with a pretty amazing team of people. My executive team was great. But really, they had a consent order for BSA AML in 2025. And they worked so hard that, and this is all public information, by January, I think I had been here for maybe a few weeks. They had already come in and done a reassessment and had lifted the consent order. I think it, wasn't even a full year that it had been issued. So the determination and grit of this organization and the talent that they had hired was pretty remarkable. But going through one of those remediations and doing that is pretty exhausting, right? To go through that. And so, one of the big things that I wanted to do was really take a step back and be able to give people a little bit of room to breathe. And my leadership style is one that's a little bit more curated to each of my employees, right? And kind of not a one size fits all approach. So really trying to understand where we could find some room to breathe. But really the theme of the year to kick it off was maturing for scale and just making sure that we were going in and looking at all of our different operations in all of the different areas and figuring out where can we do a little bit more to mature this, right? If we were going to 10x our book of business, what would we need to have to do to be able to do that? And grow with our partners and have the technology, the right people, the right processes to be able to do those things. And so that's really been the focus of the first 6 months, is really maturing different processes that we have. And a big focus of ours is how can we use technology to do that? We talk about AI all the time in all of our team meetings. It's a huge focus of ours. You have to do it responsibly. We're not creating agents and sending them out into the wild to do things, but we're really challenging ourselves to think about how can we do this better? How can we reduce friction? Why am I doing the things that I'm doing? And I think a lot of those were tools that I learned from being at a tech company and really having, those types of things in my toolbox. And the team has just absolutely embraced it, which has been really remarkable.
I'd love to kind of get your sense of the quality of the fintechs that are coming to you. Obviously, you were at Sunrise. They were doing fintech programs, obviously all fintech programs. And so you've seen a lot of different programs over your time in this space. So I'm curious about, are people coming to you with a much better sense of what's needed to be kind of a compliant fintech program? And if not, what's it like to say no? And do you get companies that are so far removed from what they should be that you just can't work with them? I mean, how does that process look like?
I would say that in general, there's been a shift in the marketplace, right? So somebody who fits that latter part of what you just described of maybe being pretty far off of what is necessary doesn't get too far into our trap, right? That they're going to get filtered out pretty quickly. We typically want clients that have been founders before, some experience, or very deeply knowledgeable in whatever industry. Let's say they're in the healthcare space. They have a deep knowledge of that. Our typical client base isn't going to be somebody that's just like, hey, I have a great idea and I'm going to go pitch it to a bunch of banks. Like that's going to get filtered out pretty quickly. For us, we definitely want somebody who's a little bit more experienced in the space, but could be a brand new company, right? It's not somebody who had been in the market already. We're willing to work with those clients that we have a conviction that they're going to be able to, just because of how we're resourced and our specialty, right? That's where we want to lean in and really help clients to do things. But I would say in general, the grandiose ideas that maybe don't understand all of the nuts and bolts of like maybe what banking has done. There's so much money in AI and some of the other industries that I think some of that has moved maybe to other pockets of where VC money is at. And the people who have remained in the banking and the fintech space to do the types of products we work with are typically a little bit more mature and, have a passion for that space and more deeply understand that than call it, back in 2021, 2022, when money was really flowing into this particular space. Anybody with an idea, was kind of coming up with this. I think that maybe shifted to some of the other industries and we're seeing more maturity, not a lot of pushback. People are like, how do we do this right? They really want to lean into it and work with parties that can help them with compliance. So pretty good, I would say.
Okay. So I do want to bring up the Synapse debacle, shall we say, because it is still, we're a few years removed from it. It hasn't fully worked its way out yet, unfortunately. I can't believe we're 2.5 years from when that all happened. But I want to know if you think that on the banking side, do you think the banking side has learned from what happened there? And what do you think differentiates those that are really taking things seriously versus those that are still trying to fly by the seat of their pants?
Yeah, it's a great question, and why I wanted to be back at a bank is for exactly that reason. I've seen a lot, right? I lived through the consent orders and the prepaid days back in 2011, 2014. And, I was at a bank, went through those exams, lived through a lot of stuff, in the early, 2020s, and saw a lot of things. A lot of that was, some of it, yes, improvements needed to be made. Some of it was just when things pop and get big, the regulators will come in and things need to get right-sized, and there's consent orders that are issued. But generally, most of those banks pretty quickly corrected those types of things, and we're running decent ships and worked through that, right? Not all, but I would say most. The thing that keeps me up at night today is, you're going to hear me say that several times, is banking fundamentals matter. When disruption happens in any particular industry, the fundamentals that created that industry, parts of it can be disrupted, but the fundamentals cannot. Maybe how you do something, how you execute on something, how you get from point A to point B, we can always look at how those things happen, but liquidity matters. Good credit oversight matters. Good BSA AML matters. We can debate all day long about how we do the things and, how AI can help us to do those things. But, working with partners that understand what happens when a banking crisis happens, when there's a cycle shift, when all of a sudden liquidity starts to get tight, or there's a recession and payments aren't being made on time. You need to make sure that there's a team of people at these banks that understand the cycles of how that's going to work, especially when there's multiple parties that are involved in that. So I would hope everybody has learned after the Synapse debacle that you should be overseeing the third parties. This concept of direct, not direct is still baffling to me. If I have a program, doesn't matter what technology I'm using, that's direct because I'm in charge. We're the bank. We're in charge. I oversee every element of that product. There's concepts of program management. I might have somebody else who's the program manager. I might use some slightly different technology. But at the end of the day, these are all direct relationships. It's just a matter of how you're overseeing the technology and who's the program manager and in those types of relationships. And at the end of the day, the bank is in charge. I would say that the vast majority of banks understand that, and that's been made very clear that that's the expectation, throughout the last couple of years. What worries me today is, does everybody understand the banking fundamentals that need to go into running a bank and everything that comes along with it? If they do, that's fantastic, and I think we're set up for a really positive future. If not, we could see another Synapse type thing happen. It's probably going to happen in a slightly different way because I think the oversight of that particular situation has changed, but things pop up in other areas. So I think that's where we just got to keep our eye on and have the prudential regulators really make sure that we're paying attention to the fundamentals.
So then do you think it's best practice today for a fintech to be using multiple bank partners so there's no sort of single point of failure for the fintech?
I do. I think it's actually a good idea. I think it's good for the banks and I think it's good for the fintechs, right? For any bank, too much can be a concentration risk, right? Where people are going to start asking, questions about, well, what happens if this program leaves? So I actually, talk to all of my clients about the second bank concept. They might not be ready for it right away, right? They need to get started and need to build the program, but I'm happy to introduce any of my clients to banks that I think have a good foundation in this system. And I'm also happy to be somebody's second bank if they're looking to have that other source of contingency or, just opportunities to run on.
Okay. So, you touched on AI, but I do want to just dig a little bit deeper into that. I was reading that I think you have deployed AI for complaint management. And, that you still also say you need good data and a human in the loop. What, as someone who's got a background in compliance and risk, how is AI really helping? And are you feeling like you're getting good outcomes from current technology, or where do you think the AI is making the biggest impact?
Yeah, I still think we're in the very early innings of where we're going to go, but I'm I'm so excited about it. I mean, big impact is just using whatever AI tool your organization puts in front of you that's like safe and secure today, right? So I was using it 10 minutes before we got on here to help me put some ideas into a picture, right? So that I go to a meeting and have something to articulate it, right? Something that would have taken me an hour to probably build was 30 seconds of me prompting it, maybe another 30 seconds of like revisiting the prompt, and then maybe 10 minutes of reviewing it to make sure that like the final output was what I wanted. And so, there's efficiencies just throughout the organization with, those types of wins. Compliance, I think, is going to be game changing. We're not there yet with things like complaints. We've definitely seen an uptick in what we're getting from clients, how we can go through and look for keywords and look for things. But Peter, we're going to enter a world at some point where you can do 100% sampling on things. The days just doing a selected sample of something will be gone.
Right. I think we're very close to that, I believe, right now.
Yeah. Yeah. You need to make sure that you're testing the system, you're getting good outputs, and that you have a human there that can look at those types of things. But the ability to go wide and deep and to find things that the human eye maybe wasn't able to find before in compliance, I think is going to be a game changer in terms of risk management.
So Hatch is an ILC state-chartered bank in California. I'm sure you've been following debates on DIDMCA, where there are some state-chartered banks that are now seeking national charters. What are your thoughts on this DIDMCA debate?
Well, I mean, you always got to pay attention, right? I mean, in our situation, we have to be very careful about the states and we spend a lot of time and resources monitoring for all of those things. It's part of doing business, right? And it's just part of the regulatory regime that you have to work within the confines of. I don't get myself too twisted up around what is or what is not going to end up happening. We just have to comply with what's there and have a strategy for how we're going to comply with each of those states and work with our partners within those states. And at the end of the day, it's about the consumer getting the end product, right? So as long as we can get products out to consumers that are helpful to them, that are within the usury rates, that are not predatory, and we're helping them to do the things they want to accomplish, like get braces or buy a new air conditioner when it's 90 degrees out and you need one like I had to do this summer. Those are the types of things we want to be doing. And it makes it a little bit more complicated when every state has a slightly different set of rules to get those products to consumers. But that's what we'll do. So
no plans for Hatch to move to a national charter anytime soon?
We're heads down, just helping our partners, doing the things we do.
Let's end with a forward-looking kind of a view where I'm curious about your view on the whole kind of sponsor bank space. Do you feel like we have too many sponsor banks now? Do you think there's going to be consolidation? So what do you think the future of the sponsor bank space is going to look like, and what's it going to take for Hatch to be one of the long-term winners?
I think that we, just like in any industry, we're going to see spikes and valleys in terms of people coming into this space. I do truly believe that sponsor banking is a large part of the future of banking. I think more and more of us want things here. We want it at the point of sale. Walking into a bank branch isn't what it used to be, right? There's still an important element of that will continue and remain, and there will be banks that will serve that very, very well. But there will be more banks that will come in. We will see in the course of the next 4 to 5 years, some of them will bump their heads and will decide this isn't the business for them, or something will happen and they will leave the space. I think the banks that you're going to see survive this are going to be the ones that aren't going to go with the pendulum swing, right? The ones that are going to just stay right down the middle. We're not changing our risk appetite right now because we feel like there's a narrative of, a regulatory pendulum swing one way or the other. We're not going to follow that. We're going to stay right down the middle, and we're just going to do what we know is right. We're going to follow the rules. We're not going to try to get cute about things. We're going to stick to our risk appetite and our banking fundamentals that we know, because that's what's going to keep us sticking around. That's what has kept the banks that have stuck around for a long time. When you don't try to do something that's cute, that, is trying to sneak around corners to do things. And I hope nobody does that. But when you get an explosion of different things happening and people are trying to disrupt and do different things, it could happen, right? And so I hope it doesn't. But I think, over the next couple of years, we're going to see how that shakes out.
Okay, well, we'll have to leave it there, Amanda. It's always great to chat with you, and great to finally get you on the show. And best of luck to you and Hatch Bank.
Thank you. I appreciate it.
Here is an unexpected side effect of the AI boom. Amanda said the quality of founders coming to Hatch Bank has gone up, and part of the reason is that the venture money chasing anyone with an idea has moved to AI. What is left in fintech are second-time founders with real domain expertise in healthcare financing, home improvement lending, and more. That is a very different pipeline from 2021 or the heady fintech lending days of 2015, when a pitch deck and the generic lending idea were enough to get funded. The tourists have left and the operators stayed, and sponsor banks are better off for it. Anyway, that's it for today's show. If you enjoy these episodes, please go ahead and subscribe, tell a friend, or leave a review. And thanks so much for listening.